Many retirees are putting their plans on hold. What can you do to make sure you retire on time? A lot of folks are taking a great deal of risk in the market. Is that appropriate for your circumstance? All that and more on today's episode of Elevate Your Wealth.
And now, Elevate Your Wealth with Mark Stimpson and Casey Elkins.
Welcome into Elevate Your Wealth. Your hosts are Mark Stimpson and Casey Elkins. You can find them right here in Seattle. Elevated Financial Management. They've got 42 years combined experience in the retirement planning business. They are certified financial fiduciaries. I'm Morgan Patrick, and each and every week it's always retirement topics. The importance of having that plan to get you not only to retirement, but all the way through retirement. Got a great resource website. We'll tell you about it. All letters, EFMNW.com. That's EFMNW.com. Again, links to the TV show, our radio shows, and podcast form. Again, a lot of great information when it comes to retirement planning. And there's contact information. You can get in touch with Elevated Financial Management if you've got any questions about where you currently are. Well, here in the course of the show, we hit the topics, but we also give you that opportunity to grab a complimentary appointment with Financial Management. We'll tell you about those as we move through the show. So, guys, before we jump into our latest topics, how was your week?
It's been good. You know, we had a few extra days off, which is always nice to spend that with friends and family. I know that we're very excited about, you know, our practice. I think right now one of the things that we've talked about being foodies on the show over the years, but it's finding people that you enjoy being around and being with, right? And it can be, retirement is so much more than just the money part of this. And we spend a lot of time with our clients trying to share ways, different things they can do with their time, things that they can do during the week, way more to talk about than just the money aspect. So again, if we find a good restaurant we love to share that with our clients. We talked about this last week, went on a kind of a trip of a lifetime to South Africa and Dubai and Germany. So there's so many cool things in the world that we can do, but so much of it boils down to a plan, right? And the need to put together a solid way that you can have the retirement that you've always kind of hoped or dreamed that it would be like. But without a plan, we're kind of out there winging it. And that's what I think we're going to talk about today, some different ways that we're going to help people or try and help people put together a plan that'll last all the years of their retirement.
Yeah, that's what we're always talking about, right? Is a plan. That's what it all boils down to, and that's the main focus of our show. That's the main focus of our TV show. It's the main focus of the retirement classes that we teach, the conversations that we have individually with clients. It all comes down to a plan. Anything in life worth doing is worth planning for, right? And so when it comes to retirement, that's the next phase of life, and that's potentially a 30, 35, 40-year engagement, right? So it takes time to put together something successful. And, it reminds me of a conversation that we had earlier this week with somebody that has an advisor. We won't mention the name of the firm at the moment, but they've got an advisor, a pretty well-known firm, and actually, I think does actually a really good job as far as investment management goes.
Sure.
But that's the key, is that they are investment management. They are not retirement planning. Mm-hmm. And I think that is something that's so different about the practice that we've built and the folks that we work with. It's not just about managing the investments well. That is absolutely a very, very important piece of the puzzle. We cannot understate that, right? But that is still only a piece of the puzzle. There's still a lot more to it. Social Security, taxes, long-term care planning, Medicare, things like that, right? So there's a lot to that. And that's really, again, what it boils down to is having a plan. If you're thinking that you've got your statements, that's not a plan. That's a statement, right? That's not your plan for the future.
Yeah. Well, and I mean, we talk about it all the time. It's like, we spend our entire working life in the accumulation phase. We're accumulating and accumulating and accumulating. And then you're going to shift gears to the point where you are decumulating.
Yep.
And that's a big switch for a lot of people that a lot of people aren't prepared for. And that's what planning is all about. How's it all going to work together? And I tell you, really enjoy getting into the different topics. Now, this article that I have in front of me, you guys grabbed it, said this is what we're talking about today to start off. Retirement plans on hold. Survey reveals economic concerns of Americans 50 plus. Obviously, when you're 50 plus, you are right on the doorstep of retirement.
Yeah, that's it, right? And we call that if you're 5 to 10 years from retirement, maybe even a little bit longer, that's the retirement red zone. And the reason we call it that is because what happens in that time frame will affect you for the rest of your life. That will have an impact on how much income you can create in the future, how much sense of security you have as time goes on. And so, this article really got our attention. I'll just quote a couple things from this. It says the survey found that 68% of those age 50 and above are contemplating postponing their retirement, an increase from 64% the previous year. So that's only a 4% rise, but let's focus on the overall number, 68%. Yeah. So almost 3/4 of the people interviewed in this are saying that they're worried about what's coming up and they're not sure if they're going to be able to retire on time. And again, that's really where it boils down to that plan. If you're thinking of your retirement and we ask, do you have a plan? A lot of folks might think, well, sure, I've got my investment accounts. My plan is to retire at 65. I'll start my pension at that time. If I'm lucky enough to have one, I'll start my Social Security. And that's their plan, quote unquote. But there's so much more to it than that. Those are a couple of decisions that have to be made. But number one, is that the right timing for those decisions? Number two, yes, you may have a 401k that's worth $1 million or $2 million or $3 or plus $1 million, right? And that's great. But how do you take consistent, reliable income out of it? How do taxes affect that income, right? So the reality is that's what the plan addresses. And what it would do for the 68% of people that are in this boat, in this survey, that feel like they have to push their retirement out, is it would give them the confidence to actually retire on time and show them how it's going to work. That's what the plan does. That's the whole purpose, right? Is to make you successful despite what's happening in the economy or in the market.
One of the things I want to add to this, Morgan, is the simple fact that we're talking with a lot of folks right now about what we call a hybrid retirement. This is something some people don't think about, that maybe getting part-time volunteering, something they love, a field that they might want to get into. What about a hobby, working somewhere where you can create just a little bit of income? You get to call the shots from how many hours am I going to work each week? So there are some ways, because people are a little apprehensive right now. They're scared to pull the trigger because you mentioned it earlier. Our biggest challenge in a lot of ways, Morgan, is getting people to become, that have been great savers, to become great spenders. Mm-hmm. They don't want to do it and they're scared. But if we can show them how it's going to work mathematically and exactly how the plan will do it, it's like an Atlas ball getting lifted off their shoulders. So there's some really cool things that can be done if you work with somebody that specializes in this field.
Well, we've used that phrase, you don't know what you don't know.
Yeah.
So many people have the portfolios. And as Casey mentioned, and Mark, you've said this many times before, they saved really well. They have the monies in their accounts. Yep. But how are you going to distribute the monies? How are you going to handle taxes? How is Social Security going to fit in there? What about the healthcare part of this? There's so much that goes into it. Just showing up at retirement's door and start withdrawing from accounts, that is not a plan. So you don't know what you don't know. Now, a lot of these people, they just don't know if they can retire. You start working with fiduciaries, you start mapping this out, you're going to have information. You're going to know a lot more than you did yesterday, and you'll probably find out pretty quickly if you can retire when you want to, and if you can't, what do you do to get to that point?
Yeah, that's the question, right? If you're hoping to be retiring at a certain time frame and you find out that you can't, then the next question is, okay, well, what do I need to do to retire the next year, right? How do we shortcut this as much as possible? And it does. It takes time to sit down and have that conversation. And one of the big culprits behind that is inflation, right? We all feel that. We're still feeling it, but the reality is that I think a lot of people have kind of moved on from it to some extent, where they've just kind of accepted where things are at right now. And you know what? That's good to a certain point, because we do have to that's what the price is, right? So we have to accept that it is where it's at. However, we have to figure out how to deal with inflation moving forward in our retirement plan. That's a big piece to this, and it's one that often gets missed in the sense that the statement that you get from your accounts, that does not show you how you're going to keep up with inflation. That does not show you how much income you might get. Now, at the bottom, it might say, well, here's an estimation. If things continue on this path, we estimate that you could take $3,420 a month out of your retirement account. It's an estimation. It's not exact, and it doesn't factor in to an overall larger plan. And so for those that are listening that want to take advantage, this is your opportunity. This is your chance to sit down, to have a conversation custom tailored to you, to what you want to do in your retirement, to what you want it to look like, and for you to have the written financial plan put together by our team of certified financial planners. So with that, we'll talk about inflation. We'll talk about making sure that you can retire despite what the market does, despite what the economy does, so that you can continue on that path to the golden years that you've been dreaming of. We'll also talk about how we deal with taxes, how we deal with long-term care and healthcare, because that's going to be something that everybody has to deal with. And so don't hesitate. Pick up the phone. Give us a shout now.
Here's the phone number. Grab one of the appointments, 866-668-3625. That's 866-668-3625. Remember, you are not agreeing to become a client. If you've saved $250,000 or more, these strategies are going to work best for you. This is complimentary. This is a great way to test drive elevated financial management. You'll meet with Mark and Casey and the team and talk about your individual situation or the couple that's retiring, that couple. 866-668-3625. That's 866-668-3625. When we return on Elevate Your Wealth, we'll get more into the hot articles, the top articles facing retirees, and all that subject matter. Coming up next, right here on Elevate Your Wealth. Welcome back into Elevate Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. Elevated Financial Management, where you can find them right here in Seattle. 42 years combined experience between these two in the retirement planning business, helping their clients get ready for the big retirement. They're certified financial fiduciaries. They have a wonderful resource website. Check it out, efmnw.com, all letters, efmnw.com. There are links to the TV show. Our radio shows are in podcast form, so great information there. I'm Morgan Patrick. We're hitting the articles. We talked about retirement plans on hold, a survey revealing the economic concerns of Americans 50 plus. I mean, obviously, they're first and foremost, they're right on that front burner. Now we're going to change gears a little bit, but we're still going to talk about investing. Emphasize value as investors increasingly throw caution to the wind. That's the next article. Gentlemen, why did this jump out at you?
You know, I think it's just a good marker for everybody to think about where they sit in terms of the risk that they're taking. And I'll highlight a very specific example, crypto. There are a lot of folks jumping into crypto right now that probably still can't explain what it is, what it does, how it works, or potentially why it's even going up. And yet people are throwing their money into the crypto world. Now, to be very clear, I have some investments in crypto. Mark does as well. We know a lot of folks that do, and that's okay. I'm not a crypto naysayer. If anything, I'm the opposite. However, the point being that there is a great deal of risk that comes with investing in a asset such as crypto, one that's not currently regulated and doesn't have the oversight that some other investments do. And so the point that we're really trying to make here is, do you know how much risk you're actually taking? It's easy to look at maybe the summary of a particular fund or something like that and go, well, it's grown by 24% over the last 12 months, right? And that's exciting. And so we might have what's called FOMO, fear of missing out. And so we put some money into that with the hope that we'll capture some of the growth. And that's okay. But is that an appropriate level of risk? Is that the right move? Does that fit your individual circumstance? And is that type of risk actually fit within your plan, right? That's really the key. based on the returns that the S&P 500 has had, it's continued to make all-time highs. It's continued to rally. So has the NASDAQ and the Dow and things like that. So as things continue to go up, it creates what's called a recency bias, where people see that things have been going well and they think it's going to continue going well. And I hope that it does. I love what's happening in the market, right? I'm not against it by any means. However, is that the appropriate level of risk for every dollar that you have, for every piece of your nest egg? Is that the right place to put it? And that's a question we all need to ask ourselves.
In fact, it's interesting because there's a sentence in this article that I'd like to share that talks about we know there's two driving forces in investing, fear and greed. Mm-hmm. And when 2008 happened, fear took over, right? Everybody jumped off the ship or, lost their shorts and rode the train all the way to the bottom. We try and get our clients to not do that. But one of the things I will say, now this article says, today, the 16th year of a secular bull market has eliminated normal bounds on risk-taking. So what they're saying is people are shunning prudent financial planning right now. They're ignoring basic investment concepts because the bull has just dominated for like 16 years, what you just mentioned, recency bias. So they're thinking this train is going to continue forever, and they're ignoring what could become a disaster waiting to happen. It's interesting right now. I love to read things. Warren Buffett, I read a couple articles over this past weekend, and he's selling a bunch of his assets now because I think he knows he's come to the age to where he's going to be passing away. But what's interesting is how much cash he's holding right now. And Warren Buffett, if you know anything about him, he doesn't like cash a lot. But when he believes things are about ready to change, he's got a lot of cash because he'll jump in and he's going to make a fortune again, or his companies will. But he believes things are overvalued right now. And we tend to believe that to a certain extent too. So we're not saying don't invest, but there needs to be bounds. There needs to be a plan so that we don't get caught off guard and see our retirement portfolio get whacked in half. And if you lose half of your money, now if you have enough money, that's okay, right? Mm-hmm. But what if you've only got $1 million and you lose $500,000?
That's rough.
What's that? That's a problem, right? We have a client, an attorney, and she came to us. She thought she was worried because she has $4 million saved, but she was wondering if that was going to be enough with a $4 million portfolio, and she's 70 years old. So again, with a good plan, we can help when we know what's coming. We know a correction's going to come. We just don't know when.
Well, and we talk about this almost on a weekly basis because we've been in the middle, as you both have pointed out, of this run on the market that has just been amazing. And people have been almost the fear of missing out, lulled to sleep. It's going to always stay that way. We just had an election. The market went through the roof again.
Yep.
It's going to keep doing it. It's going to keep doing it. Well, what if something happens?
Right.
And so now the question I put to both of you is, what do you do about it? I mean, I've always heard the term, like if you go to, let's just say Vegas, and you go on a little bit of a streak, I don't know, like a 14-year bull run streak. You take what you've won, which I would consider above and beyond your investment, which would be house money.
Yep.
Right? And you put that to the side, and maybe that's what you're going to play with, but you take your principal that you came to the table with, and you put it somewhere where it can't be touched.
Right.
And that's the confidence we talk about. But just talk about, both of you can comment on this, what people can do in the middle of what this is. And it's a stock market frenzy.
It's funny you mentioned this because we keep it simple in our office. We use a red bucket, a yellow bucket, and a green bucket. And a plan is going to allow us, because it's income. Everything that we do for our clients springboards off of a guaranteed income that they know that they're going to need in retirement. So if they've got the income, if we've got that covered, then that allows us to get, I don't want to say more risky, but we can take a bigger swing for the fence right on the red money, because we know even if we should go through the downturns, which we know will happen in that red bucket, if we're looking at that as our 15 and 20 year money, the market has outperformed anything over time. So everything should be based on exactly what you need those dollars to do at that particular time. And if we do that, that's what a plan is going to set up for us. And we can't overemphasize, if you've got a good plan, you're going to weather these downturns, right? They're not going to be stuck and wondering, oh no, my income's based off of my red money, and now I just lost 50% of it, so my income's going to go down 50%. How's that going to feel, right? We don't want that to happen to any of our clients, and we're just not going to allow that to happen because we know it's not a prudent way to set up a plan.
Right. And that's, I think the other side of that too, right, is that if you do have a great deal of holdings in equities looking for growth, eventually you're going to have to turn it into income at some point, right? You have no choice. So you can turn that into income by selling some of the stocks that you own and taking the income out. You can try and buy dividends. You can move it to bonds, amongst other things that can be done as well, right? But just to list a few. And so the idea is you have to create income at some point. So what's the best way to do it? That's the question. And this, I think, is really important. This is such a basic thing, but nobody knows when the bull market's going to end. We don't know. And do you know how you know you're in a bear market? Once you're already in it. You don't know as it starts, right? That's
exactly.
There's no news flash. Hey, it's a bear market now. Everybody pull your money out. That is not what happens, right? You find out you're in a bear market when you look back in a year and go, oh, shoot, we've been falling for a year. That sucks, right? So that's the way that it works. And it's easy to look at a chart. This is what happens. People look at a chart and they go, oh, very clearly, here was a bull market and here was a bear market. Well, yeah, looking back 20 years later, that's real easy to identify. I can identify it too. Yep. But how do you know when you're in the moment that the bull market is over? Because even on a downward trend, even on a bear market, there are still rises in the market. There are still ups while you're sliding down the average 39% loss that we've seen since 1929. So does your plan allow you to be successful despite if the market continues in a bull or if we end up in a bear?
I mean, but wouldn't it be nice? I mean, if we had investing and the stock market, if it had that stamp on it, kind of like when we go buy cheese, right? You need to purchase it and use it by a certain date or it's going to go bad. Expiration date. Yeah. Wouldn't it be nice? But we don't have that. So, I mean, you got to have a plan, folks. You got to have that income. You got to have it guaranteed. You got to have that confidence as you move through to your retirement date and all the way through your retirement. Right now, just talking about, what the investors are, they're mulling over, and you're in this category, and we're in the middle of a huge bull market run. Are you prepared if it goes south? Is your plan ready for that? Just sitting on a portfolio, not a retirement plan. Now's the opportunity to get on the calendar with Elevated Financial Management. Mark, we've got a limited number of appointments. These are complimentary. They're leaving the checkbook at home. But kind of walk us through how these appointments are going to go.
Maybe you're close to retirement. Maybe you're from Boeing. You've been laid off from any one of our good companies in our area. Please, we've got a team of certified financial planners that's going to help you put together a plan that's going to address what we've been talking about: volatility, the amount of risk that you're taking. We're going to take a deep dive into your tax situation. We're going to talk about Medicare a little bit, Medicaid if needed, long-term care. So please pick up the phone, let our team help you, but we want you to know you'll keep the checkbook at home. So give us a call. Let us help you put the plan together now.
All right, here's the appointment number to call, 866-668-3625. Again, these are complimentary. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Call the number, secure an appointment right now, 866-668-3625. We've got more Elevate Your Wealth right after this. Elevate Your Wealth, hosted by Mark Stimpson and Casey Elkins. You can find them right here in Seattle at Elevated Financial Management, the power behind this program. They've got 42 years combined experience between the two of them. And again, It's all about retirement planning, helping hundreds of their clients get ready for retirement. They're certified financial fiduciaries. I'm Morgan Patrick, and we hit the hottest topics when it comes to retirement and, of course, retirement planning. This next one, Mark, you picked this one out, preserving legacies. It's more than money.
So, you talked about, legacies, right? And one of the things we've seen is a lot of folks come in here, even in their 60s and early 70s, they don't even have a will yet. And that can pose a real problem, because what people don't understand is if you don't put together at least the minimum of a will, which is just a roadmap through probate, the state's going to do it for you. And that money might be distributed to people that you are like, no way would I've given them anything. But see, that's why we have to take care of business. And what I loved about this article was the fact of how to create some things. Now, I will say this, the majority of our clients will use a trust to pass on assets for multiple different reasons. But I wanted to share first about this thing called StoryWorth. One word, StoryWorth. Listen to this. This is pretty cool about what we can do for our loved ones. It says this company will send a single question every week for a year. It then combines the answers that you give with pictures that you can submit and creates a beautifully bound book that can be distributed to family members. This can even be done as a memorial book with survivors answering questions based on what they know of the one who died. What a cool idea. I had never known about this until I saw this, but I thought, what an unbelievably cool thing that we can do. This is something I think all of us, Casey and I, this is something I want to share with clients when they come in and they ask us about doing some legacy planning, because I'm blown away by this concept and how powerful it could be, especially if a loved one dies. I wanted to put that out there. There's things called, these lifetime conversation cards. This is put together by the National Association of Funeral Directors. I have a thing in my office where I give to clients, it's called a memory book, but what so many people that have come into my office in the past, they got shoe boxes full of different things. There's no organization. They have life insurance policies. They got possibly annuities. They got brokerage accounts, but yet nobody knows where anything is if that person dies. And I can tell you, it can create a disaster. And I think if there's any listeners out there that have gone through probate with a family, they're going, yeah, Mark's exactly right on this. So it's about getting organized, but also taking care of helping the ones that we love the most. And I think that's what this is all about, is a way to pass a legacy on and do it in a very loving and kind way.
Well, one of the things we talk about quite often when it comes to planning is that we are procrastinators by nature.
Yep.
And not only do we procrastinate with our planning, maybe the last thing we think about is the fact that we may check out. And it's a morbid thought. I get it. Yeah. People they don't want to have that conversation.
Not at all.
But I tell you, if you can find a way to make it as painless as possible, maybe almost halfway entertaining, where you're gathering this type of information, but you're ready for it. What we've talked about these numbers. The baby boomers, the amount of money that is going to be transferred from the boomers. To their heirs, it is massive.
Yep.
And you got to plan for that.
Right.
Yeah. It takes time to get that put together, right? And again, to your point, Morgan, that's part of a plan, right? That's part of an overall larger plan. That's not step one of the plan, right? That's probably the last or second to last step of the plan that we review. But the number one goal is always to make sure that you're taken care of in your lifetime and you have the income that you need and you can maintain your lifestyle. But I think what it really boils down to is things left unsaid, right? That's what this article really boils down to, is things left unsaid. And if you think about anybody that you've lost, that you can no longer have those conversations with, probably some of your biggest regrets are maybe not telling them how much you cared about them, or not sharing that story with them, or not taking the time to spend together, right? And it comes down to things left unsaid, and that's what this boils down to, is how Of course, we want the funds to transfer properly, all those kinds of things. But it's the emotional side of it. Of if this is the circumstance, and as you're like you were talking about earlier, Mark, about Warren Buffett kind of dealing with his own mortality to some extent, right? This is your opportunity to do that, and there's some really creative ways. There's some really loving things that you can do. But again, what does it take? It takes time, effort, and planning to do it successfully. And that's why we bring this up. You know, we're nerdy finance guys, right? That's the reality of it. However, all of that nerdy finance stuff has to support the emotional aspect of what we're doing. That's what retirement really is. It's an emotional thing. The funds are there to support our lifestyle, but the purpose is to meet our emotional needs, right? Which is to have fun and do the things we want to do in retirement. And it's the same with legacy planning, right? There's funds to move around, there's things to accomplish, things to sign, all that. But really, it comes down to meeting the emotional need of what we're trying to accomplish.
You know, it's funny because Steve Leder, that's Leder for those that were listening. Steve Leder wrote a guidebook, and I love the title of it. It's called For You When I'm Gone, 12 Essential Questions to Tell a Life Story. But maybe we're having trouble thinking about what we want to say to our loved ones, right? It's hard sometimes because you mentioned it, Morgan, nobody wants to talk about it.
Right.
Nobody. And nobody wants to face their own mortality. But what a cool thing if we've got questions that somebody else has kind of been involved in this subject for a long time can help us to start the dialogue going and to be able to put these thoughts down in writing. I just think that's another great resource that we try and share with clients now that are needing some help when it comes to legacy planning.
Well, and you guys say it each week. I mean, it's about having the overall plan, and this is going to be a piece of that puzzle we talk about. And it's going to be different for the individual or the couple that comes in. This isn't cookie cutter. How you're going to handle your legacy is going to be completely different from your neighbors. And certainly you want to make sure you're on top of all of this. And at the same time, we understand that it's not at the forefront of your thought process as you're getting ready for retirement. You're thinking numbers, how much money am I going to need? Well, you also need to kind of take that next step, and having a plan is a great first step in getting the total package.
It is, yeah. And I really appreciated this idea too. It says find a personal historian. And I think this is really cool, something I definitely never thought of. It says, for the most individualized solution, find a personal historian or biographer in your area, and then you can tell them your stories. If you don't feel like you're a writer, you don't feel like you're somebody to write those things down, which I definitely feel that way. You can talk with them. They'll interview you, and they'll put that together for you. And of course, the price for that varies depending on where you live and to the extent that you want to accomplish that, all those kinds of things. But what a cool thing, right? To leave behind as kind of instruction to those that follow you or that, follow behind you, I should say, and to leave kind of a living memory of yourself behind to those that love you, right? Because we've all been there. We've all lost somebody, and again, it's those things left unsaid. You can't talk to them anymore, right? But that biography might be an opportunity to tell stories to certain ones that maybe you haven't shared with them before. Not that you intentionally left them out of it, but it just never came up, right? And so it might be a new way for them to get to know you, and it may just be something comforting for them to read and remember you by, and think of the person that you were, and enjoy those memories as they go through it.
It's funny you mention that, Case, because I love too another resource here. It's called the Forever Letter, writing what we believe for those that we love. And there's if anybody wants to get more information, just reach out to us. We'll be glad to tell you that. But it's all about sharing in this letter the values that we've lived our life by, maybe some wisdom and love to the people that we care the most about. And, that's another great resource to get this maybe being talked about in families, because families do not usually like to talk about this. Casey knows exactly what I'm talking about. He's lost some grandparents recently. My mom is 90 now, so I'm going to be dealing with that probably in the near future. So again, this is something every one of us is going to have to face. Why not create memories now and create some things that could be so awesome in the future for our grandbabies, our great-grandchildren, to know about us, that if we don't get these down in writing, they're not going to be preserved, right? It's not going to happen.
So, guys, it's not hard to get started. I mean, certainly it just takes, acknowledgement that you need a will, you need a legacy, and you sit down and you start planning it. But do you have, in your mind, do you have a time frame on when would be a good time to do it? I mean, is there a certain age that you're thinking about? Obviously, maybe you're still working, but you're starting to think about how I'm going to kind of map this out.
All I'm going to say to that is that you mentioned it. We're procrastinators. Humans are just that way. So it's something that we talk to every client about if they come to us and they're only 50 years old, because stuff can happen. And we've had some recent situation with clients that nobody wants to hear about. But the bottom line is, if you don't have a plan, somebody's going to put it together. So why continue to kick the can down the road? It's just time to get this conversation started. The sooner the better. I mean, and that's what I loved about some of these ideas. You can create stories, in your 40s or 50s. But the point is, you got to start somewhere.
Yeah, and I would agree. I think it's always now's the right time, right? I think now is the right time to do it. And you know what? That's the truth for any plan that we're trying to put together, including an overall financial map for retirement. Now is the time to do it. And this is your opportunity to get a written financial plan put together by our team of certified financial planners. We'll talk about the emotional aspect of retirement, meaning what do you really want to do? I think the financial world has taken the emotion out of it, and people are so focused on their investment accounts that they miss what this is truly about. So how do we take your finances and make them fit your life instead of making your life fit your finances? What do you want your retirement to look like? How are you going to plan Social Security? How are you going to take your RMD? Is there something that can be done to lessen your taxes? We'll talk through all those individual parts and pieces with you in a custom tailored conversation just for you. Don't hesitate. Pick up the phone. Give us a call.
Here's the phone number, 866-668-3625. That's 866-668-3625. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. Again, 866-668-3625. When we return on Elevate Your Wealth, it's time for retirement scenarios. I'll throw them at the fellas, see what they come up with. It's all next. Your Wealth. Your hosts, Mark Stimpson and Casey Elkins. Elevated Financial Management, where you can find them right here in Seattle. I'm Morgan Patrick. Between Mark and Casey, 42 years combined experience, helping hundreds of the clients get ready for retirement. They're certified financial fiduciaries. Great resource website. Check it out. EFMNW.com. All letters, EFMNW.com. Easy to remember. Again, TV show links, radio show, and podcast form. There's a lot to do there. Any kind of event that's coming up, you'll be able to find it right there on the website, EFMNW.com. Before we get into our scenarios, let's jump in on this. You guys had something happen. You guys wanted to kind of relay that to our listeners. And when I say something happened, I guess this is a client experience. So let's talk about it.
Yeah, we like to talk about specific situations with clients sometimes. And this one really kind of hit home for us. And I think it's something that maybe a lot of folks are going through right now. We know quite a number are for sure. So a gentleman and his wife came to us I don't know, maybe 6 months ago, something like that. If I recall correctly, they came to a workshop at one of the colleges that we teach. But either way, they found us, came in to have a conversation, and we helped them get a retirement plan set up. The wife was a nurse, works at one of the local hospitals, and husband worked for Boeing.
Been there 44 years.
44 years.
Yeah, 44 years.
So he's been at Boeing for 44 years, and was planning on working 3 more years until he was 70. Felt like he was in good shape to do that. Was looking forward to kind of closing the chapter on that at age 70. That was his goal. And we put a plan together for him. And really, was a really good looking plan, I would say. One struggle that we had up front was that he had so much of his money invested in Boeing stock before he met us, and Boeing had taken such a hit that that almost cut their investments in half, right? But still able to have a great retirement. He's got a good pension. Wife will have a good pension. I mean, their plan looked really good. And so lo and behold, we get a phone call from him. He got laid off. So here he is. He's been there for 44 years. 44 years that he's been committed. It's realistically the only job he's actually ever had. And he worked his way up from the bottom and was planning on closing things out with a 3-year time frame left. And now he's getting laid off, and he's at an age where he feels like, I don't know if I can actually go work somewhere else, right? I don't know if somebody will hire me, and if they will, probably have to take a pretty sizable pay cut,
right?
And maybe even go into a different industry or a different role. And so, that required us to pivot. We have to make changes. We had to adjust the plan, right? But that's the key, and I just want to highlight this. A true plan allows for you to be flexible despite what happens. And so they're still going to have a good retirement. It won't be quite the same, but they're still going to have a good retirement. But how devastating to be there for 44 years and to lose your job like that. Yeah.
Yeah, I'd like to maybe add something here because, this all happened right after Boeing had a long strike, almost 2 months. And they wanted their pension back. Isn't it interesting? Boy, the pension's been gone for over 11 years now, 12 years now, and they wanted that back. Well, Boeing wasn't going to budge on that, and they didn't get that in the new deal. But as soon as that deal was signed, a lot of upper management, they cut the fat, is what they're calling it. And he had no idea this was coming, but he ended up telling us how excited and thrilled that he was that he had talked to us before this happened, because when this did happen, I know Casey Casey had to talk him off a ledge. He didn't know what he was going to do.
He had just been laid. I mean, I talked to him 2 hours after he'd been laid off, and he was upset. And you know what? I get why.
I get it. I totally get that.
Tough.
44 years,
just like that, gone.
The first thought is a P word called panic. But because you guys had been working with him on a plan, I think the initial just shock of it all, you're gonna get through that. But the fact that you have a plan, there's so much less panic.
Yeah. And
exactly.
To what you were saying, Mark, I mean, he gave us such a nice compliment, because that really meant a lot to us. And he said, hey, after the dust kind of settled and I thought about it for a little bit, I just was so thankful to have talked with you guys and put something together. And that's really rewarding for us, despite the terrible circumstance. And
that's why you do what you do.
It is. Yeah, exactly. It is.
Yeah.
And so that, again, very rewarding for us. And you know what? I think the real hero of the story here is that him and his wife, the two of them, are still going to have a great retirement. They've still got things arranged in a nice way. It does look a little different than it did a couple months ago, right? That plan does look a little different. But nonetheless, they're going to have a successful retirement. And a great deal of that is dependent on the guaranteed income that they have. Multiple pensions, multiple Social Securities, other investment accounts turning into income, that type of thing. That's what gives them the confidence to keep moving forward.
Yeah, cool. I mean, life happens. Unexpected happens.
Yeah.
But you can certainly go towards your retirement with a plan for the what ifs. And that gives you confidence as you move towards your retirement day, because we don't know what's going to happen tomorrow. And I tell you, 44 years at a company, and there's a shakeup like that'll rattle you to your bones. But having a plan is going to ease that just a bit. Well, we are now going to move to our scenarios, guys. The first one up, and you guys can jump on this and tag team it. Here it is. I want to start taking some money out of my IRA. I will keep working. I'm right around 60. Can I still contribute to my IRA after I start making withdrawals?
Yeah, the answer to that is absolutely. So even though you may be taking some money out, if you're still working, you can contribute to your IRA. In fact, the catch-up provision, I want to say, is it still $7,500 this year, Case?
I think, for over 50, I think it's $7,500.
Yeah, it might have gone up $500, but the bottom line is you can still have a nice contribution that if you want to continue to contribute to that. Now, then comes the question, well, do I want to contribute to a Roth or to a traditional IRA? that's something we need to know a little bit more about your own situation. We're big believers in Roth over traditional IRAs if there's time for the Roth to work. So again, I would say absolutely that anytime you can save money at whatever age it is, it could be truly beneficial in the long run. So your situation's very unique to you. And so just keep saving. Save as much as you can. And when it comes time to spend, we want to show our clients the best way to do it and when to do it. And that's what this plan is going to allow you to do.
Mm-hmm. And I will say this, I think, I wonder a little bit, a good question, right? I think something that many folks think about. But if you're still working, why would you take money out of your 401k or out of your IRA and contribute at the same time, right? You kind of, it's kind of a strange thing to pull some out, put some back, right? Probably unnecessary. And I'm wondering if maybe why that could be happening is because we don't have a plan, right? I think that's probably what that comes down to is like, oh, this month I need some, so I'll take some out. Oh, this month I don't need so much, so I'll save some. And we probably don't want to treat our IRA like a savings account where we take it out and put it in and take it out. You know, that's probably not the recipe for success. And so again, it boils back to having a plan, figuring out how to effectively take withdrawals. And if we're not currently taking withdrawals, how to effectively save. And is there a better way to go about it than taking some out, putting some in?
We are in the middle of scenarios. I throw the scenarios at both Mark and Casey, and they basically say, hey, this is something you could do. Now, remember, you may hear a scenario that's similar to what you've got going on, but it's not exactly. So make sure you have a plan that's customized to you. There's going to be an opportunity to get on the calendar with Elevated Financial Management at no cost. Those appointments coming up here shortly. Here's the next scenario. I've learned a variable annuity can have excessive fees. And looky, I realize that the annuity that's in my portfolio is a variable annuity. Mm-hmm. Is there anything I can do to fix it?
Good question. I wish we had a soundboard that goes womp womp womp. Right? Listen, you got a variable annuity. You know, I'll tell you what. A lot of people do. Don't feel bad about it. There are things that can be done. Absolutely, we call it a variable annuity rescue. Right? So that is something that can be done. You can get out of it potentially, right? Depending on the circumstance, if that makes the most sense for you or not. It could be replaced with a different annuity if that makes sense. We could just take the money out of that annuity and stop paying those fees. Sometimes you can just invest differently inside of the variable, which will help lessen the fees. But realistically, that comes down to a conversation to figure out what the better alternative is, right? So there absolutely is something that can be done. We always do that when folks come in. We do our analysis. We start talking about building a plan for everybody, that custom tailored plan we're always discussing. And if you have a variable annuity, that's a big part of the conversation to determine what the fees are that you pay. Can you lessen those fees or stop those fees completely? Can you move into something else that would accomplish your goals better? That's all part of the conversation. So if that's something that you need help with, by all means, take advantage of the phone number that we share to everybody that listens, and we'd be happy to help you out with that if it makes sense.
Yeah, and I'd like to just add that variable annuities we're not fans of. Let's just get this right out here right now. We're not, because of the fees that are associated with them. We are contracted and licensed to be able to, but I've never done one variable annuity in 40 years, and I never will. But that doesn't make all annuities bad. That's the problem. The variable has a bad rap, and it should. But the other annuities, different types, can be very, very powerful if they're used in the right way. So that's why you need to be educated so that you can truly use an annuity, if you need one, in the right way.
Well, it starts with a conversation, and it might be a good fit in your portfolio and your overall retirement plan. Well, now's the time to get on the calendar with Elevated Financial Management. Mark, walk us through how these appointments are going to go.
So please, if you've heard us talk in these segments today about a plan, right? And we're going to take a deep dive into your unique situation. Please keep your checkbook at home. You're getting ready to retire, or maybe you retire and you left Boeing. Whatever your situation is, pick up the phone. Let our team of certified financial planners put together a written plan that's dealing with your taxes. It's going to deal with Medicare. It's going to deal with legacy planning we've talked about. So please just pick up the phone. Let us help you put together a plan that will allow you to have a very successful and stress-free retirement.
Folks, remember, life happens. Don't panic. Have a plan when it comes to your retirement. If you've saved $250,000 or more towards your retirement, these strategies are going to work best for you. These are complimentary appointments. You're leaving the checkbook at home. Call the number right now and move to the front of the line claiming one of these appointments. 866-668-3625. That's 866-668-3625. We get it. It's stressful. It's your money. Work with professionals. Work with a fiduciary. Map out your retirement before you actually get to retirement's door. Do it now. 866-668-3625. Another edition of Elevate Your Wealth, powered by Elevated Financial Management, in the books. For Mark and Casey, I'm Morgan. We'll see you on the radio next week.
Investment advisory services offered through Foundations Investment Advisors, LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in states where it is properly registered or excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. All rights reserved.